And I do want to start off here just to get an assessment of whether you thought it was a success.
You know, this is a significant step forward. There's a lot of work to do. That was a big part of the stock take in Dubai. There's a big gap relative to our collective ambitions, but we took a step forward in naming the challenges that we face in terms of our reliance on fossil fuels, and then setting these really ambitious targets on renewable energy. At home, we're working to expand our capacity to produce the products that allow us to hit these goals.
I do wonder about the commitment to this, though. It's one thing to put it in writing, and there'll be certain countries, maybe like the U.S., that will move forward in this. Do you have confidence, though, that the other members who signed on to this will follow through?
Look, accountability is a central part of this, and the whole Paris mechanism. The meeting in Dubai really follows on 8 years since the Paris Climate Agreement was achieved. The whole Paris mechanism relies on transparency and accountability from peers and from civil society. So we've got to bring that accountability. But if you look at the scoreboard, the International Energy Agency says we are increasing our deployment of clean energy technologies. That's reducing demand for fossils. So we'll see that demand peak. And I think this gives additional momentum to that trajectory.
Well, let's talk a little bit more specifically about the U.S. and accountability, because as I'm sure you're aware, U.S. production of oil, of fossil fuels has been surging. So if you have the U.S. opening new oil and gas fields, does that betray the pledge in any way?
I think what we've got to focus on is our targets as we look forward, right? 2030, cut our emissions by 50 to 52%. Put ourselves on a trajectory no later than 2050 to get to net zero. And that's got to allow us to meet those goals. We've got to move on a bunch of different parallel tracks. The first, to your point, is we've got to make sure that we're meeting near-term demand. And that's where, you know, we've got to accept the reality of the stock we have, whether it's in buildings, transportation, or the power sector. But we're rapidly turning that stock over to clean energy, whether it's electric vehicles or it's clean heat in buildings or it's solar and wind. So that's how we wean ourselves off of fossil fuels. I think we're doing that in a robust fashion under the president's leadership.
Well, let's talk too about hydrogen here. Of course, we're waiting for Treasury Department guidance for claiming hydrogen production tax credits. Those rules, I believe, we're expecting them next week. They've been the subject of a lot of lobbying and a lot of pushback from the likes of Senator Joe Manchin. What is the guiding mission statement of those tax credits, and how is the administration thinking about some of that pushback?
So our guiding light in setting the rules to implement the Inflation Reduction Act, the biggest investment in climate in the history of the world, is to boost our energy security, to spur U.S. manufacturing, to cut costs for consumers, and to create the certainty that allows for accelerated capital formation and project development. Today, we issued rules on the manufacturing tax credit, 45X. I think that will accelerate things like the manufacture of solar, of wind turbines, et cetera. I think with hydrogen, the goal is the same. How do we not only deploy the availability of clean hydrogen, but really reposition the U.S. to lead on the core technology, the electrolyzers, make them here at places like Cummins in Minnesota, and seize the advantage going into decades that will be defined by this race to supply the world.
What do you make of what's been going on with regards to the adoption of electric vehicle, or really just non-gasoline powered vehicles here? We had kind of this big surge for a while in EV adoption, and that really has slowed for a variety of reasons. But I am curious as to whether you think that some of those loftier goals that people had for production and sales targets of EVs and hybrids, et cetera, whether that can still be met.
I think we're still surging. If you look at where we were in 2021 when the president came into office, we've doubled the number of charging stations that line our roads and highways, and we're on a trajectory to get 500,000 installed. We've doubled the number of models that are available. By the end of next year, we'll have doubled it again to almost 100.
Right.
We've got 10 million EVs worth of battery factories that are going to be in production by 2030. So, you know, if you just look
But is that a build it and they will come? Because right now people aren't coming. I mean, the prices for a lot of these vehicles are still high. And as you know, there's still a lot of range anxiety. And if you don't live in, say, a single family home where you can install a charger, there's still a lot of people wringing their hands about if I live in an apartment, can I really have an EV?
Yeah, look, we had a period in the last couple of years because of supply chain issues globally that lithium ion prices actually flatlined, maybe increased a little bit. This year, we're seeing them come back down again. Bloomberg has done analysis that says that the cost curves will align in just a matter of a couple of years. If you think that's bullish, maybe it's a few years out beyond that. But you pair that with the incredible momentum, I think, that is being spurred by the OEMs. What we're seeing with workers really be part of that transition, the success of the UAW, and then incentives at the state level on top of the Biden tax credit for EVs. I think we're on a secular and very clear trajectory in terms of the deployment of this technology in the U.S. and leading the world on it.